Hello, everyone, and welcome to Live with Suzi program. Happy to have you once again with us, Mr. Shane Malek. We're so proud to have you talk to us about the world of finance, in particular about the retirement plans that sooner or later we all need to know about it and know what steps to take in order to really be able to sustain and maintain the lifestyle we are all accustomed to at some point and another. So, and I want to say today, believe it or not, is part number 15. So we've been doing this show for 15 weeks. Of course, we do it every other week. But thank you so much, first of all, for choosing Live with Suzi platform to inform us about what you do and help us out in this important issue.
Hi, Suzi. Good afternoon to you. Thank you for having me as always. Well, hard to believe, 15 times.
I know. Time flies, Mr. Malek, as the saying goes. Before we start this show and I jump into my questions for today, I'd like to let people know who Mr. Malek is, what kind of a background. Mr. Shane Malek is a financial consultant with many, many years of experience with so many happy clienteles and customers that he's had over years and helped them out. So once they get to the retirement age, they won't panic and they know exactly where they stand, and that's all great and helpful. He's also a president of FMISINC. The website is www.fmisinc.com. There is a toll-free number, 1-800-477-1556, that you can call and make an appointment or ask any questions you may have. And I hope that if you get a chance, and if it's your first time listening to this show and program, to please go ahead and check the website of Mr. Malek, which I just gave it out, or go to Live with Suzi platform on social medias, podcasting included, and check out the other parts we've had so far. Mr. Malek every other week chooses important subjects that would be very useful for you guys to know what really to do, what to prevent, what steps are the right ones to take, what plans to take when it comes to the retirements. And so it would be useful. And I certainly suggest that you should listen to other parts, as well as obviously part 15, which is our today's program. On that note, if I may start the question for today, which I wrap it all in one, and then I'll be sitting here quietly and listen to you talk. It would be about the new laws and how does actually the taxation work when the owner of an IRA, for example, would die, particularly if there is a spouse and a child that are both beneficiaries. Would you please tell us about
absolutely. That? Good question, as always. And this has been really the most very devastating kind of a situation that I've been dealing with since this law changed prior to January 1st of 2020. There was something in place that you could actually, they used to call it the stretch law, meaning that if you had an IRA and you were in the 60s or 70s and at some point you die, at some point you die, the money will go to, say, either your wife or child, whatever age, and they could start what's called RMD, known as required minimum distribution, at that age. And then they did not have to pay the bulk taxes for the whole amount of the IRA that was just inherited by them. So that changed. That actually went away on January 1st, 2020, which means there's no stretch law anymore. So now when you're having a large sum of IRA, what are you going to do? So when it's inherited by either your spouse or your children or child, what's going to happen is that they either have to pay the taxes immediately if they were to withdraw the money that day, or that year, I'd say, or they could kind of pay it in 10 years every year. However, um, the problem is that, you still have to come up with that tons of money up front, whatever that money is. And then even if you're earning a higher interest rate, it doesn't justify. So what I wanted to kind of say very quickly, I'm always short for time. On this particular subject matter, I can talk for an hour probably. But honestly, what can be done, a couple of things that I recommend. And if anyone hears this and they are in that situation, please do call me, because there are ways that you can at least reduce those situations. Normally, the two subject issues here. One, if you have an IRA and you're a certain age and you want to provide something, say, for your spouse, it's best time for you before you pass on, actually, before you die, to convert it. And I don't normally recommend this in a regular situation, to convert it to a Roth IRA, which then means by doing so, by converting it to a Roth IRA, you are now not subject to RMD anymore, meaning that you do not have to pay the required minimum distributions that you're obligated to do when you reach the age of 72. So that's one. Two is that the difference really for the difference of the Roth IRA versus a regular IRA is that you have an interest-free product now, which then means whatever interest you earn, either for you or for your heirs, will all be tax-free. So by not paying the RMD and earning a tax-free interest rate, and you could, if you're 75, 76, you might die at the age of 86, 87, 90, so have another 13 or 14 years that you're not paying RMDs, and yet you've paid your taxes either in 1 year, or you could kind of have it over 2 or 3 years. And then by not paying the RMD and having the tax-free interest rate, you would definitely compensate for that somewhat. And that is one way of doing it. Or if that's not what you're planning to do, if you think that's something that you might, the taxation that you don't, or you want to avoid paying up front, the other way around it is that you could generate an income rider option for your spouse on your own money, which then means that you would have an X amount of income assigned to her every year to be taken out after you're gone, without having to really worry about how they're going to withdraw or pay the taxes on that money. So it gets a kind of situation where you need to, one, discuss it with your accountant. If you're in a high tax bracket, definitely you need to make certain provision so you could sort of spread out the taxation of the money, maybe in 2, 3, 4, 5 years. And then that way, by making the higher rate, not paying the RMD itself, don't forget, the RMD is about 4% of the total value. So say if you have a $500,000 IRA, 4% of that you would have to take out every year, which is $20,000 plus whatever you're earning. And then you're depreciating or depleting the accounts by so much. Whereas where you could do it this way, you're not paying that $20,000, yet all the earnings that you make on the money becomes tax-free. So whatever taxes you pay up front, it will be made up for in a very short time. But then the hassle of dealing with the taxations for your heirs would be totally gone, and you could kind of come back to where you were in a very short time. So really, it all depends on how old you are, how much you have. Are you taking the RMD? Is that something that you're concerned about? Do you have a pension or you don't have a pension? If you only have the Social Security, or if your spouse only has the Social Security, so it's not a bad idea to look at the income rider option. The income rider option, most people won't probably understand what I'm saying. A lot of these accounts will allow you to elect an income for your spouse that they can never outlive. So therefore, no matter how many years they live for, how much money is involved, that amount of money will be paid off each and every year to that person. And so there is no fear or worry about any of this income situation. So it's a situation where one needs to look at the whole picture. And I think it's good to, an individual has an IRA and just puts money in X amount, and these accounts will not know all of these things, you know. So without really having any ideas as to what the outcome might be, it's a little bit difficult to calculate or to figure out or to program to kind of try to really see where at least your heirs will be, what your taxations are like, and all that. So it's not a bad idea to speak to someone, to your agent, or give me a call. I'll be more than happy to evaluate your accounts and tell you where you might be. It's more complex than I'm saying it, but it's really a situation where you need to take advantage before, God forbid, you pass on.
Before it actually happens.
Yeah.
So could a CPA, a regular CPA, handle this, or this is where we need a financial expertise of person like yourself to deal with it?
No,
because a lot of us have a CPA and assume that they would know and they can give them a correct advice, etc., etc.
No.
Could you elaborate on that? The
Yes,
last couple of minutes we have for today.
Accountant CPAs are great, but they don't know the tools available. They don't know what the industry can offer these days and all that. So it's not something that you can freely have access to. So what normally you do, you have to have a financial consultant. What I meant by talking to your accountant was this, that what kind of an income bracket you're at. So if, for instance, if you're having a $300,000 income a year and you have $500,000, $1 million in your account, you definitely need to talk to your accountant and see where the break is. In other words, if you have enough deductions, enough write-off, it's one thing. If you don't, and then we don't want to take the income, or you don't want to pay the taxes on your IRA on a conversion to the Roth in 1 year, because that would be too much to take all in 1 year. And then we'll see what the other options are. Are we able to assign an income rider options to your family or family members at some point, or not, even prior to you dying? I mean, these are the things you can always arrange. If they don't have any, if you say wife does not have a pension, then all they have, all she has, is a social security income. Therefore, it makes all the sense to have some income rider option assigned to her, and then yet reducing the taxes based on her income that way. And it's something that it can be done. So what I'm trying to say.
Thank you. Appreciate that. Well, it's a kind of a complex issue we're talking today, which is why a person with a complete expert in the field, in this case, Mr. Shane Malek, our guest, would be a great person to get in touch with and find out more, and he can help you. Again, the toll-free number, 1-800-477-1556, or you can visit the website www.FMISINC.com. Until 2 weeks, that we would bring out another subject about the world of finance, in particular retirement. We wish you all the very best. And thanks again, Mr. Malek, for the world of knowledge that you share with us and our viewers.
Thank you, Suzi. Always a pleasure.
Likewise.